Hi, thanks so much for tuning in. My name is Joel. I'm from Ally Wealth Management, and today we are just going to be going through a couple of little tips and tricks. Obviously, as we're approaching end of financial year, it's that prime tax time here in Australia. So here's, I suppose, some easy, efficient ways to build up them tax deductions and obviously prepare for the best long-term wealth. Just to be mindful, obviously, this is just all sort of general in nature, and this is all published on the Australian Taxation Office website. But I suppose for individuals, it's important to seek tax advice from your registered tax accountant. So let's dive straight in, shall we? So the first tip I would like to bring up is the concept of a concessional contribution in towards your superannuation. This is a type of contribution in which we can gain a tax deduction from this kind of super contribution. So under the current rules regarding contributions in Australia, the concessional contribution limit is $27,500 per annum. Now, this limit is comprised of your employer contributions and any salary sacrifice contributions. So as well, you can also add personal contributions and claim a tax deduction on these. So if, for example, you're earning $100,000 a year, the current SG contribution rate is 10%. So you would have $10,000 contributed from your employer. That leaves you with $17,500 left of your concessional contribution cap. So what you can do is add a contribution of $17,500 and claim a tax deduction for that contribution. This is really helpful for, I suppose, some of our clients that have, for example, incomes that are in excess of $100,000. That means that you would immediately receive a tax deduction or up to 30 to 49% tax back on your return. In addition to the concessional contribution cap, if, for example, you have a particular tax event that has happened in, I suppose, this financial year, there are rules that allow you to do what is called a carry forward concessional contribution. So a carry forward concessional contribution essentially means that you can use unused concessional contributions from prior years up to 5 years to make essentially a large lump sum contribution to superannuation. Now, this could happen, let's just say if you've sold an investment property and you have a capital gains tax event. It could be the example where you make a more significant lump sum to superannuation to reduce the impact of that capital gains tax liability on your personal income tax. Now, there are some certain rules that go hand in hand with this, of course. There are a couple of things. You can't obviously exceed your concessional contribution cap at any point in the prior years, and you need to have a super balance less than 500,000. So this can be a really good strategy for some people to help negate those larger one-off, I suppose, windfalls in regards to their taxable income here in Australia. So as well, the ATO defines rules when it comes to things like investment properties. There are certain things that are immediate tax deductions and some that are applied through a depreciation schedule. The ones that are applied for immediate deductions are what we call repairs and maintenance. So this is essentially something within your property has needed a repair to essentially return it to its original state. So this could be, for example, your hot water system has blown up. Obviously, it's a fundamental part of a property. So what you can do is replace that hot water system. That would be an immediate tax deduction. There are other things that would apply through a depreciation schedule, and that includes, I suppose, things that are going to enhance the property value. So that could be more significant renovations, carpets, flooring, these sort of items you won't be able to claim as a significant deduction as they're seen as a property enhancement. But you can depreciate these over a set number of years. So it's really important that if you are, or you do have a investment property, that you consider the best ways to maximize this, not only for this financial year, but as well for a couple of financial years to come. And also speak to your accountant to see what is going to be the best solution for you. Keeping on flavour with the investment properties per se, there is one way that we can claim an immediate tax deduction. And so interest expenses on loans are a tax deduction from your taxable income. So what you can do is essentially arrange to have the interest on your loan prepaid for a set, you could essentially prepay it for a year, and then you would get an immediate tax deduction on that prepayment, because that prepayment of that interest has happened in this financial year. It may require obviously a small conversation with the bank to arrange such an arrangement, but it is doable. There's a couple of other just quick things I'd like to highlight. And obviously in Australia, we want to try and maximize our deductions in preparation for tax time. So a couple of things that, that might be claimable throughout last financial year for you could be something like if you work from home. COVID has had a broader impact on, I suppose, how we work going forward. So if you've been working from home, or you've got more or less a flexible working arrangement, there might be additional expenses that you can claim from working from home. This as well, there's all the usuals, such as, for example, travel, clothing and dry cleaning. If you've in self-education to, I suppose, improve your work, these things might be claimable as well. Another thing that could be tax deductible is things like income protection. So if you pay for income protection policies, then these premiums will generally be tax deductible to you, because generally the income that you receive from that, in the event that you need to go on a claim, that will be applied as income tax. And the only other thing that I just wanted to highlight was, other fees such as union fees, accounting fees. If you pay a financial advisor, these things as well will also be potentially tax deductible. So that's all I had for you today. Again, just a short, sweet, punchy video. I hope you get as much out of it as possible. By all means, if you need any further assistance, or you would like to have a chat about something like this, by all means, feel free to reach out. We'd love it if you subscribe to our channels and follow us on social media. We aim to have these posted, little hot tips, as the year goes on. Thanks so much for tuning in, and we'll see you soon.